Good morning. How are we all feeling? Following up Melissa Ambrosini, that's a good big ask. Okay, so 11 months, 1 week and 6 days ago, I started my own business. So I had been an employee of accounting firms for 15 years before that. And I had this niggle in my stomach most days that I wanted to do it differently. I wanted to do it better. I wanted to do it for me and have control. And the only way that I was going to be able to do that is if I dove into the world of business and took it on head on. So 11 months, 1 week and 6 days ago, I jumped. Holy moly. So I know accounting really, really well, and I know tax, and that's fantastic. Everything else that you need to know about business, no idea. I'm black and white, literally, but also as an accountant, I'm not creative. I couldn't put together a balloon display like this. I couldn't create amazing presentations. This is just a template from PowerPoint. And that's the thing that I've learned, that you need to do what you do well, and going on from what Melissa said, find other people that can help you with what you do. So before I start, I just wanted to say an amazing thank you to Eva. To have an event like this, you have no idea how lucky you are to come and get 2 days of training on every facet of your business, because I wish I had this 11 months, 1 week and 6 days ago, because it has been an incredible learning journey. So I'm here to talk about the foundation of your business. So accounting, tax and financials. Now, everybody in this room got into business so you could do a tax return, right? And you like completely understand your financials, and when you're thinking about jumping or not, you're like, I cannot wait to do a business activity statement every quarter, right? No, just me? Okay, cool. Awesome. Okay, so, and that's the thing that I find. All the wonderful creative people in this room have an idea or a passion or a service that they want to share with the world. And so they take this leap into business because they want to share this gift. And then tax and accounting and financials get involved, and it just gets really hard. Or you just ignore it, and then it gets really, really hard. And businesses fail. Businesses fail because women, primarily, don't take time to understand this. We are creatures of heart, not creatures of head. And so we focus so much on what we want to share with the world and what we want to achieve, that we just leave this until like 30 June or maybe a little bit after. And then we go and get some substandard advice because, we've been so focused on what we want to do, that then afterwards, after we've been doing it for 12 months or 18 months, when we should have got it set up at the very beginning, we go and get some advice. So, it worked. Okay, so there are 4 things that you need to know primarily when you're going into business. The structure. The structure is the foundation of your business. And a lot of you will go, I'm a woman, I'm going into business, I'm going to do this under my name. And that is the easiest way, and I'll go through each of the 4 main ones. But getting your structure right at the beginning is very important. It affects a lot of facets of your business, and we'll go through that in a minute. Tax. Tax is an implication of business, and who here wants to pay tax? Yes, and that is the right answer. Who here wants to pay tax? It means you're making money. A lot of money. Exactly. And I will go through this with you, but that is the mindset I want you to achieve. If you are running a business, you will not have anybody withholding tax for you. So we get out of employee land where your employer pays you a salary and holds a little bit to give to the ATO. That will then fully fall on you. So you want to pay tax. And I know that's a really hard mindset because we've grown up this whole lifestyle, going on the tax man is the devil. But if you're paying tax, you're making money. So if you don't want to pay tax, you're a charity, not a business. So we'll go through that. Financial statements. Woo, how exciting to read that. The financial statements are the information about how your business is going. And they don't have to be technical or complex, but you need to understand the basics. Because if you don't know how much profit you're making, you don't know how much money you get to take home at the end of the day. And while we're in this because we have a passion or a service or a gift that we want to share, business is making money, and do not shy away from that. As women, we don't own that a lot. Okay, and lastly, an accountant is the education. One of the things that I found even when I'm starting going into business, we're very, very cost sensitive. And I understand that there's not a lot of money to go around. And there are some facets of our business that we'll spend a lot of money on, and there's some that we don't. And I'm not saying your accountant has to be pricey. What I'm saying is when you choose an accountant, you need to find somebody that understands you and that you understand. And an accountant is so much more than preparing your tax return at the year end. If you are not financially minded, you need to partner with somebody in your business that is. And I call them your business bestie. So I try and be the business bestie for my clients, which basically means when you win, we celebrate and we have wine. When you're being slack, I'm going to kick you up the butt. And what that does is it holds you accountable. But also it means when I have a bad day, I ring my best friend and I whinge and I moan and I cry. And then she's like, really, Michelle? Really? That's what we're crying about today? I'm like, and she gives me perspective. And then she'll explain things to me in a manner that I understand. You need that in your accountant. If you were having surgery, would you just find the nearest doctor that's close to your location? Or would you research and find somebody that you feel comfortable with? Do that and your business will have more chance of succeeding. Okay. Hobby versus business. And this is a big one. Who here is doing a side hustle while they're still employed? Awesome. That's amazing for two reasons. One, it gives you the confidence and the ability to build up your business while you're still got a regular income. And two, it gives you the ability to decide whether it is or not you're going to go in it. But when does that hobby, and we say hobby, become a business? And when do you need to report it to the tax office? So the most common misconception is that there is a dollar value that chooses whether it's a business or a hobby, and that is actually false. Some businesses cannot make $1, and some hobbies can make you lots of money. So it's more about what it looks like to the world. So a hobby, who here makes goods or sells goods and services? And who here is just a service-based business? Okay, so it's going to sort of be a little bit different for both. If your aim is to make money that you're going to live off, that's a good indicator that it's a business, not a hobby. If you're just making some candles and you want to cover your costs and you mark it up a little bit, but if you make some money or you don't, doesn't matter, hobby. If you set up a Facebook page and you attend to it occasionally, it's mainly just for your family and friends or their friends and family that they've recommended to you to find you, hobby. If you have a Facebook or an Instagram or a Twitter or website and you're constantly promoting it, updating it, offering out to the public, it's repetitive, it's structured, business. Now, there is not one of these single elements that decides alone whether your business is a hobby or a business. It's the multitude of facts. And that's a really hard one because some people will just say, oh, well, it's a hobby. But they're at a market every weekend and they're constantly posting up on Instagram and they're constantly offering. That to me would be more of a business. It's about what's repetitive, what you're relying on, how much time and energy and effort and structure you're putting into it. If you go and register a business name and an ABN, well, then you're a flat business. That's it. Now, some hobbies can supply to businesses. So those of you that make goods and services, make goods, if you provide them to legitimate businesses, you can still be a hobby. But you need to be able to know because the business will want to know whether you've got an ABN or not. Does that make sense? The $20,000, so the tax-free threshold for an individual is $18,200, which means from all of the income you earn, you don't pay tax on the first $18,000. So there is this misconception out there that the first $18,000 of your business income is what you get pretty much scot-free. However, if you have a business that makes you $20,000 and you have a salary that makes you $50,000, you've got $70,000 worth of income. So that's not an indicator of whether it's a business or not. $75,000 is whether you need to be registered for GST or not. So that's a different one altogether. Lots of figures. Okay. So check out that website. There is a whole bunch of questionnaires on there. There is a multitude of multiple choice questions. And it'll give you some sort of indication about whether what you are doing is currently a hobby or a business. And there are implications from that. So structuring. You need to get your structure right. And structures are changeable. So if you choose one, we can fix it later on if it's not the correct one. But the reason why you need to get this right is it's going to affect these things. It's going to affect your tax. Who pays tax? We all do if we're making money. But which entity pays tax and at what rate? So you need to get your structure right. Who's responsible as a business owner? And we'll go through each of these. Who's liable if it all goes wrong? So a lot of these people go into business and we go in as a sole trader, but that leaves all your personal assets up for grabs if something goes wrong. And if you have a mortgage, if you have a house with your partner, that means that's all on the line. So there are ways we can protect that by putting structures in place. And those are things that we really need to think about. So asset protection, so protecting the assets of the business if you have any, and the ongoing cost and the volume of the required paperwork. So different structures do have more complex reporting obligations, and that will affect your choice. So the 4 most commonly used: individual sole trader. So who here is running the business under their own name? Tax file number, cool. And in most businesses, especially startup businesses, that's how we find it, and that's completely normal. A partnership. Who's in a partnership with somebody else? Oh, go ladies. And are they both individuals to individuals in a partnership? Cool. 3, cool. So you can have partnerships between individuals and you can have partnerships with other entities. But partnerships is a structure. Companies. Is anybody operating under a company? Oh, go lady. Look at you. Yep, perfect. A couple up the back. And a trust, just to add that at a degree. Wonderful. So we've got them all in the room. And I'll go through what each of these are. So a sole trader is pretty much that. You run the business under your own tax file number and ABN. It gets reported in your tax return at the end of the year. And you're taxed at marginal tax rates, which is basically individuals. So whether you were earning the income as salary and wages or whether you were earning it as a business, it's all taxed the same. So what are the advantages? It's really simple to be a sole trader because everyone's got a tax file number. We've all worked. It's really simple to set up. You just get an ABN, link it to your tax file number, and we've hit the ground running. Simple, cheap, and effective. You control it. So as the sole trader, you're in control. You make the decisions. You don't answer to anybody. And that's all what we want as a business, right? That's one of the reasons why we've done it. It's less compliance. You just add it in your tax return at the end of the year. So that's pretty simple. And it's easy to change. However, the disadvantages are the only person that can be taxed is you. So whether you make $10,000 or if you make $1 million, tax rates change as an individual. They go from as low as 19 cents up to 49 cents. So if you're earning over $180,000, which we all hope to be at some point, you'll be losing half of that to the tax man. So we need to get that right. We compare that to a company. A company is 27.5 cents. So that's a lot of tax to save. So the unlimited liability that we talked about, your assets are on the line. So if you take out a business loan and the business goes south for some reason, we all hope it doesn't, but as Eva said, 60% of businesses fail. They can come after your personal assets and take them to recover any debt. And there's some really obscure tax rules that I won't go into because I'm sure this is not sexy enough as it is. But if you run a business under your own name, there are limitations as to what you can claim. I can help you with that if you need to. Cool. Let's move on. Partnership. Basically, a partnership is just 2 entities together. Could be 2 individuals, 2 companies, 2 trusts. Could be a company and a trust. Could be a company and an individual. I'm trying to think of all the combinations, but that's about it. They still need to lodge their own tax return every year, so there is a compliance cost for that. However, the income is assessed in each of the partners' tax returns. So there is an extra level of complication. In terms of asset protection, same thing, simple to set up. You share control with your partner. Less compliance because it is just an extra tax return. However, the thing is partnerships work if you have a partnership agreement. Do you have one? Our ladies with partnerships? Yeah. And that's what we see. You go in, you find someone, you're like, I like you like me, we're going to complement business really, really well. Let's just do this. Let's shake hands. Pinky promise. Everything's going to go fine. You need to invest the time and the money to get a partnership agreement because when things go bad, if they go bad, and God willing they won't, nobody's going to negotiate well when things have gone bad. So invest the time and money up front to get a legal document, which basically says if we want out of this, how does it work? How do we make agreements as how do things work while we're running it? If you and I don't agree, what's the tiebreaker? Who makes the decisions? If you do 60% of the work and I do 40%, do you still get 50% of the income because you own half of it, or do I get 60%? If I'm running the business every day, but you've put the capital in, how do we split that? There are a whole range of questions, and everything's great at the beginning. when you've got hope and aspirations and this is going to be the best thing ever, but get yourself protected by a legal document. Where's my company lady? My company lady. Okay, so a company is a separate legal entity, which basically means it can borrow money, it can sue and be sued, and it earns money in its own right, which it relates to, which is owned by the company. So a shareholder owns the company. So are you the only shareholder in your company? We will change that. Okay. So basically shareholders own the company and the company makes the money and gets taxed on it, and then the profits get paid out to the shareholders. I know this is really hard, like overwhelming and really boring, but these are things I would like to let you know. Now, a company is taxed at 27.5 cents in the dollar, whether it earns $1 or it earns $100 million. So an individual is taxed at 19 cents in the dollar up to 37,000. So before, if you're only earning up to 37,000, it would make sense to be an individual because the tax rate's lower. But the minute and the figure is $103,000. Once as an individual, your profit is more than $103,000. And everyone's like, well, that's a lot of money. But we're going to run successful businesses, right, ladies? We're going to get to that point sometime soon. It's more tax effective to be a company. So these are things you need to think about. Company too, as well, your personal assets no longer on the line. A company can only be sued to how many assets it's got. So if you want to protect your business, or you want to protect your business and you want to protect your personal assets and keep them separate, I highly recommend some sort of structure like this. And in terms of setup costs, it costs about $1,500 to set up a company. And then your ongoing compliance costs are a little bit more. But $1,500 to save your house, which is worth however much, is something we really need to think about. And a trust. So a trust is an obscure structure. And I won't go too much into it, but I did have a trust lady in the house. There's my trust lady. So basically what a trust is it's another separate entity which runs a business for you. However, the trust isn't taxed, you are taxed. It's more of an asset protection vehicle than a tax-effective vehicle. However, it gives you the option to distribute the income to lots of different people, and you can choose that, which gives us the ability to do tax streaming, which gives us the ability to pay lower tax. I'm not going to go into it in too much detail because I know it's really overwhelming, but we can talk through it later if you need. So a trust is definitely asset protection. Again, it's a bit expensive and it is quite complex to understand, so you need an awesome accountant that will help explain that to you. But it is a good vehicle to use if you want to protect your assets and you want to be able to reduce your tax bill. So some people have a name. Who had heard of a trust before today? Yeah, okay. So this is about exploring things that can help make your business better. So that's definitely an option. Okay, so you've just now decided a structure. Who here after that is thinking about possibly changing their structure? Okay, cool. Oh, okay, awesome. And more than happy to chat through. I'm here for the next 2 days, so more than happy to chat through the pros and cons of each. But basically, setting up an entity. So once you've decided you're in business, and we've done our quiz, which shows whether we're now a hobby or a business, and it says you're a business, so we need to get legit. We need to set up an entity. So we've now decided which entity we're going to set up. We've got that, we've done the legal paperwork if we need to. We've gone to a lawyer or an accountant can also help you do those things. You now need an ABN and a tax file number. So if you're doing it as a sole trader, you already have a tax file number. You just need to register an ABN. Now, tip for you. If you Google register an ABN, there will be a website or several websites that say, yes, we can do that for a fee. And you're like, okay, cool, of course, that's legit. I'm registering for something that I need to pay for it. It is free to get an ABN. And I know so many people have gone down that trap of just Googling, I want to register for an ABN, and there's some really smart companies that have paid for Google advertising to get themselves up the top of the list. You click on that and you pay the money. So Australian Business Register is the website. It's a government-run website. Register your ABN through that. If you set up a company or you set up a trust or you set up a partnership, it will need its own ABN and tax file number. So you'll have to do that. Business name. God, how hard is it to choose a business name? Yes. If I was Michelle Maynard, I don't need to register a business name if I was a sole trader. But the minute you change your name or the minute you are an entity other than an individual, you need to register your business name. Tip for young players. Check that it is available on Instagram, on Facebook, on a domain name before you set your heart on it. Because if you search ASIC, which is Australian Securities Investment Commission, which is where you register your business name, $82 for 3 years, gives you exclusive use. There are some people who have bags the name you want on ASIC, but haven't set anything up on social yet. Then there are some people who have bags the name you want on social, but haven't gone and paid the money in ASIC. Now, I've had clients who have gone and registered the business name in ASIC and then go to these people who have the name on social media and say, I now own the name, give me the handles. And they're like, yeah, sure. $5,000? So check that whatever you want is available on both forums before you go and set your name on it, before you get your logo designed, before you do your stationery. Make sure it's available and register it. If you're going big and you're going to have employees, there are other registrations you'll need to do with the tax office. You'll need to register for superannuation with a super fund. You'll need to register for pay-as-you-go withholding. So as employees, we know our employer takes out money every week or fortnight or month. You will need to do that for your employees. And you'll need to get workers' compensation insurance. These are all mandatory. You can't get around them. The optional. So this is going back to the 75,000 that we talked about before. Who here is registered for GST? Okay, awesome. So GST is mandatory the minute your revenue hits $75,000 in a year. Now that's revenue, not profit. The other part of that, it's annualized revenue. So if you get 6 months in and you've hit $40,000, you need to register because over a year, it is expected that you'll earn 75. So 1 July 2000, showing my age, 1 July 2000, the government introduced goods and services tax, which is pretty much a 10% tax on all goods and services. However, if you charge GST, you can claim it back on anything that you purchase in your business to use it. So basically, it just means the consumer, the person down the very end, is the one who cops it and can't claim it. So when GST got in, I was working at Target. And I remember on 30 June, everybody came in and bought stuff because everyone knew that the price was going up 10% the next day. Okay, so GST. You can voluntarily register for GST. And a lot of small businesses get in this trap because they register when they first get into business because they've got a lot of expenses. And you want to claim the GST back. And I'll explain to you what that means. If you have an expense for $110, which includes GST, you can put in a BAS return and you can get $10 back. So 1/11th of what it is. And the ATO just gives you that $10, which is great when you're having expenses because you've got a lot of GST that you're paying out and you want to get that money cash back into your bank account. However, that also means for every dollar you sell, you have to give 9 cents to the ATO. And you can't just go, oh, hang on, I registered when I was starting because I want to, claim it all back. But now I'm making money. I'm not making over 75, so I'm going to deregister myself and I'm not going to remit it. That's not how it works. The minute you register from that point on, you can claim it back on your expenses, but you also have to give the ATO part of your money. So think about that and talk that through with your accountant. Okay, what structure should I use? Again, pretty good websites. Government website, register.business.gov.au, help me decide. Again, there's some multi-choice questions, and I was going to go through it, but it's a bit hard to go through it. Depending on what you want to achieve, if you go through the multiple choice questions, it gives you some scenarios. And those are really good to get a bit more clarification, and then take that to your accountant and make a decision. Okay, so you're in business. Now what? So you've got a structure. You've set up all your ABN and your tax file number. You've done the quiz. You found out that you're actually a legit business. You're not a hobby. So you're in business. So now what do we do? Accounting system. Oh, look how excited you are. Who here has been running a business for more than a year? Okay, how much did your business make last year? You don't have to tell me, but do you know that? No? You know roughly. Cool. What was your and that's the thing. What was the thing that you spent most of your money on? Can people answer that question about their business? Product? Okay. So yeah, and we'll go through that. Okay, what product made you the most money? And that's not what sold you. That's not which one sold the most. It's after the expenses, which one did you make most profit on? Of your advertising, which one was the most beneficial? Which one got you the most customers? If you've been running a business for 12 months and you don't know the answers to these questions, not kill yourself, that's probably a little dramatic. But these are things that you should know because, ladies, you are putting your money, your time, your sweat, and your effort into this every day. If you don't know what's making you money, you need to know for it to survive. So I have a daughter. She's 7. I also have a son. He's 2.5. And he's not really a son. He's more of a tornado. But my daughter went to Taylor Swift last night with my husband. He was really thrilled. And I'm here because this is my business. but I know what this value this is going to be to my business. I was in Melbourne Monday, Tuesday, Wednesday doing some training for something else. Again, that cost me flights. It cost me accommodation. It cost me 3 days out of my business. It cost me 3 days away from my kids. I haven't seen them much this week. I'm sure they're lovely. But I know what that cost is to my business. I know what that cost is to me personally as well. And I need to know these things, because if I don't, I need to make decisions. And if you don't have the financial information, like I said, we're creatures of the heart. We go on, does that feel good or not? Right? When a business decision comes in front of us, does that feel good or not? Is it going to help me achieve my purpose or not? We don't think financially. That'll come later. But you need to be able to answer these questions about your business to know whether it's going to survive or not. Who here has got employees? Awesome. Okay. So if you had the best employee in your business, the one that advocated for it, showed up every day, started early, left late, worked weekends, worked nights, put in 110%, would you pay them nothing a week? $0. Just like, thanks for the privilege. Like you came, would you do that? As an employee, for those of you that are employees, would you show up in the morning from 7 till midnight, work extra hours, advocate for your business, put all the time, put it in, and then say to boss, you know what? Skip pay this week, I'm good. No? Cool. So who here has a business is paying themselves? No. However, yet you are the person that shows up first thing in the morning, that clocks off last thing at night, that puts in the time, the sweat, the tears, the time away from kids, the missing Taylor Swift. I'm more upset about missing Taylor Swift because I think it would have been amazing. But you need to pay yourself. And in business, we do this thing about there's the income that we bring in, and then there's the expenses that we pay everybody else, because everybody else has to get paid, and whatever's left is mine. I might put it back in the business, but yep. You need to put yourself up the top. Has anyone read a book called Profit First? Yeah. I recommend reading it. So basically what Profit First is it's a system. If anyone's read The Barefoot Investor, like everyone just likes being told what to do, talks about percentages. And pretty much it says put 1% away of all your revenue to profit. Just 1%. Everyone's like, well, that's not very much, but I bet you it's more than what you're putting away now, right? And so there's other concepts that it talks about, putting money aside, but you need to pay yourself first. You're not a charity. You're doing this. It's a business. You legit want to get paid. So organize your structure and know your financials so you can determine how much you're going to pay yourself and what your business is actually worth. So the financials, does it all add up? Is a balance sheet just BS? And are you at loss with your profit and loss? Accounting puns. 1, 2, 3, and I am done. Who here knows what a balance sheet is? Love it. Did you? Okay, cool. Profit and loss? Who here has one of those and looks at them more than once a year? Twice a year. Well, that's 2 more times than some other people in the room. You need to, this is basically a health check report on your business. You need to be looking at this, and I'm not going to say all the time, but once a month. Because if you don't know how your business performed in the last month, how do you know how you performed? And we have this thing in a lot of people, especially small business owners, and they say, how's business going? And the first thing you think about is your bank balance. It's healthy. Yeah, business is okay. Oh, it's a bit low this month. It's not. Okay, cool. So if you had $10,000 in the bank account, would you say business is good? Possibly. There's a lot of variables on that. Some people would say, yeah, $10,000 sitting savings in the bank account, that's great. But what if you owed people $50,000? Business is not good. I did $100,000 worth of sales last month. That's awesome. But only $20,000 of that's actually come through in cash. The other people still owe me and I'm trying to chase them. That's not a good business. But if I said to you, I've done $100,000 in sales last month, most of you would go like, go girl. That's awesome. But this information comes from those reports. And if you don't look at them, how are you meant to know? The other part of that is the fence between mine and my neighbour's house blew down. And I went to her, oh, well, your fence at the back got repaired a couple of months ago. Why don't we use that guy because he did quite a good job? And she was like, no, not him. And I went, but you were happy with him, right? And she said, yeah, that's great. And he came, he did day 1 and day 2. And day 3, he was sick, so he sent his subcontractor. And so the subcontractor finished the job. And he never invoiced me the final payment. So I never paid it. So I owe him about $2,000. So don't call him back because he might remember. Now, first of all, not ethical. But secondly, that fencing contractor obviously doesn't have a system in place. So he's out $2,500, $3,000 because He was sick. He relied on somebody else who obviously didn't do as good a job as what he did. And he had no record keeping or invoicing system or accounting system in place. Now, it might get to the end of the financial year and he's going to go through his processes then and find that he's out $2,500. But 11 months after the fact, is he going to go back for it? Well, I hope so too. But what do you think the chances are she's going to go, oh, well, it just gets messy. So you need to have some sort of system in place. And there are free systems out there. There are some ones that cost you a little bit of money, and obviously it depends on the volume and size of your business as to what you use, but have some sort of system in place because otherwise it's all up here. And when this gets cloudy because we're trying to wear a million different hats and we're trying to do a million different things at once, if you forget something, you're going to cost yourself time, but possibly you're going to cost yourself money. And we're not charities. We are business. Okay. There's a clock over there. Awesome. Good, because I don't know how long I'm waffling on for. So profit and loss is your business performance over a period, a day, a week, a month, a quarter, a year. So I recommend you look at this every month. And the things that are on here is basically your income. So what you've made through selling your services or your business, less what it's cost you. So this is an example of a profit and loss. So up the top, you have your revenue and your sales, so what you've made. If you sell a product, then you've got what we call your cost of goods sold, so what it costs to buy those things, freight, the actual thing, what you're buying, getting it over here. And so your revenue, take your cost of selling those goods is what we call your gross profit. And your gross profit is basically what your real income is because it's after you've purchased the thing that you need to sell. And then below that is all your other expenses. Now, those other expenses are sometimes called operating expenses, which basically means if you don't make $1 of income, you still have to pay those. So rent, insurance, accountants. You're going to have a good one. All those things. So these things you need to know. Your fixed costs, whether you sell anything or don't, you're going to have to find that money every month. Your cost of goods sold is a variable because if you buy 10,000 things, then that's what, and you sell 10,000 things, you would have had to have bought 10,000 things. So and after you've done that, so you've got your revenue, what it costs to bought the things you sell, and all your expenses. Down the bottom is the most important figure that we all love. It's net profit. That's what you get to take home. So we want that figure to be as big as possible. Now there's and I've got the worksheets here and I was going to go through some activities, but who wants to do maths first thing on a Saturday, right? There is some calculations that you can do, and I've got the information here that will get sent out to you, is how to analyze those figures. Because we need to analyze them to a degree, right? It's all good knowing that one sort of, what it is, but if we don't know percentages and we don't know a recurring, how it goes over a few months, we're not going to sort of be able to do any comparison. So you want to calculate your cost of goods sold as a percentage of your revenue. So what that tells us is how much of your sale price covers the purchase of those goods. So, and we're going to go off this table here, which you'll get in the slides and you can read it a little bit later. But in this example, 43% of every dollar sold goes to covering the thing that we bought to sell. Now, you want that figure, the cost of goods sold figure, to be as high as possible because that means you leave money for everything else. We don't want all of our sales price taken up by the thing we buy. If we buy something for 80 cents and sell it for $1, that only leaves 20 cents to cover all of our other expenses and pay you something. So we want that figure. So basically for every dollar we sell, we want to have what we buy to sell that as small as possible. And then it's a gross profit margin. So you want your gross profit to be high because gross profit is what is left to cover all your expenses and pay you. So for every dollar this business sells, 57 cents is what you get to take home after you've paid everything else. So you want that number to be nice and juicy. Gross profit is pretty much related to your cash flow. The higher that is, the more cash you're going to have. I'm going to jump through this. There was an example we can do, but I'm running out of time. What do you need to know? Or why do you need to know? So basically, looking at these reports is telling you how this is going. It's more than your bank account. It's showing you how much money you're actually making every day to take home. It gives us opportunities as an accountant to do some tax planning with you. Now, the money you take out and the money in your bank account is not necessarily the tax income that you're going to be assessed on. And there's nothing worse than getting to the end of the year, especially when you're a sole trader and having this really high profit figure, even though there's no cash in the business. And I've heard another presenter who's going to talk about cash flow with you. And then you're taxed on something, but you've got no money in the bank to pay for that. So by having these reports and looking at these reports regularly, you're going to be able to do some planning, and your accountant should help you through that. It also, lets you make some decisions. So if your profit is declining, should you increase your sales volume? Is that where we're going to target our money? Or is it just that our costs of goods sold are really high? Should we try and find a new supplier? Should we try and, cut that down a little bit? Or are we going to increase our sales price? These are decisions that you don't know what to do unless you've got the information in front of you. Otherwise, you're just guessing. Okay. So a balance sheet. A balance sheet is basically the difference between what the business owns and what it owes. So you need to know this because basically whatever's left is what the business is worth. If you had to sell everything today, how much is going to be left over? So let me just have a quick look at this one. So the company here has 1.13 million of assets. It only has 570,000 worth of liabilities. So the owner's equity, which is what the owner owes, is 560,000. So if everything was sold today, the owner would get $560,000 in their hand, which is not bad. It's what your business is worth. However, if you had liabilities of 1.1 and only assets of 560, if the business was sold, you would owe someone $530,000. These are things that you need to know. How much is your business worth on paper? And these are things that will help you decide if you ever want to sell, what to ask for it. If you want to go and get debt or finance funding, the bank will ask for all of this information. The biggest thing that I found, especially coming from an employee to a business owner mindset, is I was really used to whatever hitting my bank account was mine. Somebody had taken care of the tax. Somebody had taken care of the super. And so whatever was in my bank account was my spending money. As a business owner, that's not how it works. Whatever comes in your bank account is what you've sold. You then need to cover all your expenses. You need then to put something away for tax. And you need to put away for your super. That's one of the biggest things when it comes to women entrepreneurs. We hustle in our business for so long and we don't pay ourselves super. As women, even as employees, our super balances are normally lower than men when we retire anyway because we've gone and had babies and we've worked part-time. If I can take anything away from my session today is please set yourself up for the future, even if it's $50 a week. Pay it. It's a tax deduction, so you get that as well. But put something away for you for super. Also put money away for tax. So how it works in the business world, even especially if you're a sole trader, is you trade for the first year. Hopefully you get a profit, then you get a big bill from the tax man. And most of us go, oh crap, I haven't put any money away for that. So you go into a payment plan. But then the ATO also puts you on this thing called pay-as-you-go installments, which is basically they say every 3 months we want you to pay something towards next year's tax bill so you don't get a big, huge tax bill. And then it becomes a cash flow issue. You're dealing with this big, huge tax bill, plus you've got to find some cash every 3 months. So you need to be able to plan for that. No one wants to pay tax, obviously. We want to pay tax, but we don't want to pay too much tax. So records. And did I mention records? Keep receipts of everything. Some people will tell you can go off your bank statement. That's a big fat lie. The ATO won't let you do that. Keep receipts. And when I say keep receipts, I don't mean the paper ones that get chewed up or lost or faded. We all live in a world of technology now. Take a screenshot of or take a photo of it. If you've got an accounting software, you can normally upload them to your accounting software, but store that somewhere because then your accountant is going to be able to get the best deduction for you and make you pay less tax. Some common deductions. If you use your motor vehicle in your business, keep a logbook for 12 weeks. Pick your 12 busiest weeks. If you're dead over winter, don't do it then because we want a really high business percentage. And then keep all your other expenses, fuel, insurance, repairs and maintenance, and then we'll be able to claim a big deduction for you. Home office, keep a log of how many hours you work from home because we can claim a deduction for you based on that. Keep it in your diary. Telephone and internet, stationary, advertising, setup costs. All these things are deductible. Anything you spend in your business, bar, going out for coffee, drinks when you celebrate, and some like restaurant meals, pretty much everything else is deductible. Even if you don't know, keep good records because then your accountant will be able to tell you. Oh, and then that's gone. Cool. Yeah. And the last thing that I'll say really, really quickly is reiterating, find somebody that you want to talk to. Most people just pick their accountant, H&R Block, whatever is their H&R Block in Brisbane or Sydney, wherever everyone's from. Some people just pick the local suburban because, oh, my business is not big enough yet. Find somebody that you want to go and see, that you want to bounce your business ideas off, that's invested and interested in your business. Because if you have that partnership, it will definitely help your business to thrive. Any questions? Everyone? Yes. So, a BAS thing. Cool. So a business activity statement is called a BAS, is when you're registered for GST. If you register voluntarily, you can do one per year, an annual one, or you can choose to go quarterly, which is every 3 months. If you have employees, you have to do a BAS even if you're not registered for GST every 3 months. So that's an extra reporting obligation that you have to have. Tax returns, if you're a sole trader, is due 31st of October. If you haven't done it, unless you are registered with a tax agent / accountant, and then you can get until 15 May next year. But you have to be registered with one before 31st of October. Thanks so much, guys. Really appreciate it.